What are the advantages of Wall Street investors? Welcome back to the Denny Mathews channel. In this video, we'll explore the many advantages Wall Street investors have over small investors. Financing. Right now, interest rates are incredibly low for regular buyers, and that's great. If we were to go out and look for a mortgage, we could probably get a 30-year fixed for somewhere around 3% or 3.5%. It is close to the lowest it's ever been. Invitation homes, on the other hand, can borrow money at something like 1.5%. That may not sound like a lot, but it means they can bid $10,000, $20,000, or maybe even $30,000 or more on a house and still pay the same amount on their loan that you and I would for a smaller loan. In short, institutional investors can offer more on a house and pay the same, a huge advantage. Cash offers. The second is cash offers. Heard of anyone losing out to cash offers recently? We sure have. Well, not all of those are from institutional investors, but you can be sure that institutional investors can and will make cash offers and either hold the properties in cash or refinance later. This gives them a huge advantage in winning good deals. They can close in a matter of days when regular home buyers have to wait weeks or months. Data and research. The third advantage is data and research. Companies such as BiggerPockets are working hard to bring their members, who are almost all relatively small investors compared to these companies, as much data and research as they can. However, these companies have teams of data scientists building algorithms to predict which properties and markets will yield the best returns. Not many people have access to that. Patience. The fourth advantage is patience. These companies don't need somewhere to live, they just want to chase the best returns. They can wait as long as they want to find a good deal. Regular home buyers often don't have that luxury. Efficiency of scale. The fifth advantage is the efficiency of scale. In our last video, we mentioned that Invitation Homes has about 80,000 residences. They have multiple teams of maintenance people, leasing agents, property managers, and more. They can use their purchasing power to source materials for cheaper, and they can rehab properties on a dime as well. In general, the larger you become, the more efficient you get, and that is definitely true of these companies. Market share. The sixth, and perhaps the most concerning of all these advantages, is market share in individual markets. Although these companies aren't controlling the housing market on a national scale, they could on a local scale. This has the potential to truly spiral out of control. We already have an affordability problem in American real estate where everyday Americans and individual investors cannot afford to get into the market. If big institutional investors start targeting a specific market, that market could really get out of control. They could start dictating pricing in both the housing and rental markets in any area where they get sufficient market share. Also, the types of homes these companies buy tend to be the same ones individual investors like to target: mid-price range fixer-uppers that make good rentals. Because these companies can bid more, oftentimes using cash, and renovate at lower costs, it gives them a structural advantage over the individual investor. Wall Street investors surely do have an advantage over small-time investors. What do you guys think? Feel free to comment below if you have any questions. Thank you guys for watching, and we'll see you in the next video.